Kotak Mahindra Bank numbers are prima facie not looking all that impressive. Now it's rare that Kotak Mahindra Bank numbers are way below street estimates. 664 is what the ET Now poll was penciling in. They've reported 591. This is consolidated prima facie, just the basic numbers. The market reaction on your screen 709, and that's the problem with the franchise like Kotak Mahindra Bank. It's priced to perfection. Stock is trading at 4 times book. A little bit of miss and the market reaction would be there. Is this largely because of a drop in fee-based income or some sharp NPA provisioning? We don't know the details, but prima facie the standalone numbers are 340. Standalone numbers means that this is the pure banking number, which does not include the kind of income or the profit they've got from the subsidiaries, which is the insurance arm and the securities arm. So prima facie it's a miss by Kotak Mahindra Bank. Gross NPAs have gone up marginally, very marginal, from 1.97 to 2. That's not a big factor which would have dented the bottom line for the quarter gone by. So I'm just trying to figure out, is this drop in margins? Is this some hit because of restructuring? We don't know yet.
No wonder Kotak Bank actually slid to the day's lows ahead of its earnings. Pat, definitely there has been some disappointment. The gross NPAs, like Nikun just pointed out, the net NPAs actually, I stand corrected, 1.1% versus a comparable of 0.96 on a sequential basis. Just have the Pat performance both on a consolidated as well as net run. The NIMs, they have come in at 4.9%. So let me just dig out as to what they compare it with. Margins, they were likely to remain stable. I don't have the comparable figure for the NIMs with me right now. Nikunj, can you dig that out?
It's 4.9, so it's status quo, so which is what we need to figure out. I mean, if NIMs are solid, if NPAs have not gone up, why are profits way below estimates? Maybe there's a slowdown in credit, or maybe markets were pricing in just too much from the fee-based component. Now for Kotak Mahindra Bank, the fee-based income is always a big primary driver which has differentiated. But if I purely look at the banking operation, honestly, no problem. 5% NIMs in a tough environment, well, that's extraordinarily strong. NPAs on a decent size book, way below 3%, much lower than what PSU banks are reporting, so that's extraordinary. There you go, Q3 NIMs are actually at 4.8. They've gone down from 4.9 to 4.8, which honestly is perfectly acceptable. It is the fee-based income which I think should have taken a hit. I'm just trying to connect dots here. I don't have any number to support my thesis. It would be conjecture if I say something strongly, but I'm simply trying to look at the various verticals. We'll have to wait for the fine print.
The NII as well, Nikunj, has come in lower. So both on the top as well as the bottom line, Kotak Bank has actually disappointed the street. The NII stands at 1399 crore rupees on a consolidated basis, and the ET Now poll was expecting 1474, an uptick of nearly 24%. So they've disappointed both on the NII as well as the profit front, 708. And remember, we were in any case expecting high provisioning to impact the standalone profits for Kotak Bank, and it seems like it's a case of high provisioning as well. And like Nikun said, we need to see or monitor the comparables as well, while the NIMs have come in absolutely flat this quarter. Kunal Shah joins us from Edelweiss Financial Services. Kunal, your first take on Kotak Bank?
Yeah, so overall, if you look at it in terms of the consolidated earnings, that has been pretty much in line with our expectation at around 6 billion. But on the standalone side, their banking business itself, it was slightly lower than the expectation. We were having approximately 3.75 billion, and they have reported 3.4. So I think overall this would have got hit on account of investment depreciation, wherein they have chosen to amortize it over the period of 3 quarters. So I think on the investment side, there would have been some provisioning in this quarter, which would have led to the lower earnings at the standalone bank level. Asset quality, if we broadly look at it, it has been stable. There has been 4 bips increase in the gross NPL from 1.97 to 2.01. So that is pretty much in line with our expectation. I think overall, say the investment depreciation of 43 crores during the quarter have led to, say, relatively lower net in the standalone entity.